Hi, everybody. Welcome back to another edition of VCTV. I'm your host, Kyle Ellicott, and we are here today to talk about one of our two favorite subjects here at VCTV, and that is FinTech. We're going to talk about everything FinTech today, financial services, to banking, to digital currencies, to the future of the financial landscape as a whole. There's a ton to talk about, and so we've brought some of the best and the brightest from around the world to share with us their expert opinion on what's happening from their on-the-ground perspective in these areas. And so we're very excited to dive in, as so much has happened just over the holiday weekend, and even more is to come as we round out the year here in 2020 and looking to a very exciting, potentially contactless payment world in 2021. But we're going to talk a little bit more about that here in just a moment. But before we get to introductions, a big thank you to your audience for tuning in. If you're liking what you hear, click subscribe and do reach out if you're interested in being on a show here at VCTV to share your thoughts and insights about different technologies, industries, and regions around the world, as we'd love to have your expert opinion with us, whether it be about financial services or many other different topics and technologies that we cover here on VCTV. Entrepreneurs, there's also a spot for you as well on VCTV, and that is to join us on the virtual stage to pitch us as investors and founders focused on your area, your company, product, or service. Get real-time feedback from us, along with building foundational relationships and giving exposure to our entire live audience. What better way to round out the year and kick off another than doing just that? Do reach out to the team and or myself. We'd love to find the right opportunity for you. And last but not least, a big thank you to the LATOKEN team and to Maria for making VCTV possible every single day. With that, let's go ahead and introduce each of one of our guests who are joining us from around the world today. Ravi, welcome back to the show. It's a pleasure. A little introduction and background for everybody, please.
Thank you, Kyle. Great to be back. So for everyone's benefit, my background is in long-term in the financial industry, where I spent altogether 16 years focused very much in the investment banking business, more specifically in securities businesses across macro and equities trading. Most recently, I've been involved in the startup of a fledgling investment manager, which is focused upon machine learning, with a very specific focus on deep learning, which we feel like is something that hasn't been explored enough in the financial space, and we're hoping to monetize off that.
Awesome. And what is deep learning, if you could, for just a moment, in respect to what you guys are doing? We've talked about AI and machine learning and how those relate, and also how data plays a role, but deep learning, this is a new term we've heard here on VCTV. Would love for a quick explanation.
Yeah, absolutely. So I hope that most people are broadly familiar with machine learning now, which, to put in layman's terms, is using computers to mine patterns from data, whatever the data set may be, whether it be in finance or retail or whatever it happens to be. Deep learning tries to take this one step further by building on some research that was actually done a long time ago in the 50s and 60s that opened up the world of neural networks, which actually, ironically, was an area of research that pretty much went to sleep in the middle period up until about almost 10 years ago, when with the large growth in computational power and the ability to process huge amounts of data through multi-layered and deep neural networks, we're now able to work with a slightly more abstract version of learning compared to the more sort of traditional levels of machine learning that we're all more familiar with. So that's it's not a very good explanation. It's in a nutshell, but again, what we're talking about is feeding vast amounts of data through neural networks that are actually multi-layered and are able to abstract data in a new kind of way, which we weren't able to do more than 10 years ago.
Very exciting. Well, we're going to dive a little deeper into it. So thank you for giving us the top level there, Ravi. And Miko, welcome back to the show. It's a pleasure as well to have you. A little intro, a little background, please.
Sure, absolutely. So, I'm a co-founder with the Evercoin Exchange, co-founded it with Talib Ozturk, who's actually more famous for making Hazelcast, which is a in-memory database used at just about every major financial institution that you could think of. So I worked with him previously on this in-memory database, and that's kind of how I got my exposure to fintech, as well as I've been in open source software for almost 30 years. A little more recently, I joined as a general partner with Gumi Cryptos Capital, a $30 million investment fund for blockchain and cryptographic assets. So that's pretty much me in a small nutshell.
Oh, wonderful. Thank you. And Adrian, welcome back to the show as well. A little intro and a little background for everybody.
Hello, Kyle. Hello, everybody. Nice to be back to the family. This is like I don't know, a special gathering. My name is Adrian Niculescu. I'm a non-technical guy working like crazy to keep up with my technical colleagues, because the times are very challenging from this point of view. I'm involved in a few projects. One of them is CloudCoin Consortium. CloudCoin is a post-blockchain digital currency, and I do communication outside of Canada and US. I'm also involved with Faster Capital, which is a Dubai-based accelerator and incubator for companies, and a mentor in Virgin Startups, Richard Branson's program. Happy to be here.
Wonderful. And happy to have all three of you today. And would love just to jump right in. As I mentioned pre-show, as we were talking a little bit about some of the big headlines, a lot has changed here in terms of fintech and the landscape as a whole. We've got PayPal now entering not just the digital currency market, but also pushing forward their payments and purchasing services throughout many different retail locations. We've got more contactless payments happening than we ever have before. We've got newer technologies on the forefront as things come in. And to Ravi's earlier discussion as well, we also have more data than we've ever had before around payments and around payment habits. But really want to ask each of you your current state of what you're seeing happening in the fintech landscape and how things have shifted and shaped, and as things look towards the future here in 2021. So Ravi, let's start with you. What are you seeing as the current state of fintech and financial services as they stand today from your spot on the ground? Oh, you're on mute.
Sorry about that. So I think I'll focus on the contrast which I see from the traditional banking industry, which obviously I've been involved in for a long time. I mean, having been in that position, even though I was more on the sort of securities and investment side of things, you do get after such a long time, you do get a strong feel for how a bank works as a whole. And what I can say is that the industry, the traditional industry, the banks don't feel like they've changed a huge amount for 50, maybe 100 years, and they're finally sort of coming around to the fact that the fintechs are on the horizon, and they're starting to do things a lot better in them. And we're all familiar with companies like Revolut. Well, perhaps not in the US. I think they're entering the US, but certainly in Europe, Monzo Bank and various other emerging digital banks were very quickly gaining licenses and doing things such as currency transactions, which still cost a fortune at banks, bank transfers that often still cost a fortune over a certain amount of money. And they're doing all these things for free and opening and democratizing the banking landscape to, I think, a level that's frightening the traditional industry. And certainly a company that I used to work for, Barclays, they have been on an absolute binge of acquisitions in terms of where they can see opportunities of bringing in technology, which they're not, embarrassingly for them, they're not capable of creating internally and innovating enough. So I really welcome it. I see, a real sea change in terms of the innovation that's coming into the industry, that's being able to transform the way that things have been done for so long and just haven't been disrupted enough, which has just meant outsized profits for companies that just don't deserve it, ultimately speaking. So I think it's a win-win everywhere. The consumers are winning. They're getting a lot of commoditized services that they should have been getting which they should have been getting a much better deal on for a long time now anyway. And at the same time, we're seeing a really encouraging space for innovation, which is giving us new types of products and new services. Another example I can think of, which relates very well to the banking world, which didn't really allow the consumer into the markets per se, whether that be from a capital raising perspective or a trading perspective. And now you have various digital banking apps that allow you to trade shares in the US for free, for example, which 10 years ago was unheard of. So again, we're democratizing the investment landscape as well, which I think is very encouraging.
Well, and there's so much more to be had, right? I mean, we're just seeing the early days of this, if you will. I mean, we've started to see new applications coming at a rapid pace over the last 2 quarters of 2020, and this is just the beginning. So many companies have really transformed themselves from a traditional company in their XYZ business to offering financial services in different ways than they may have traditionally thought. You know, Apple was a very big component of this earlier in the more in 2019, but coming forward to 2020, we're starting to see more companies again starting to enter that fintech services or financial services space as well. But I want to hold on that in just a minute. I've got a question I'm going to come back to you, but before I do, Miko and Adrian, I want to come to you next on this. So Miko, current state of financial services and the fintech landscape, how are you seeing things today from your world?
Yeah, so I think we can't really talk about this on this given day without mentioning that today at some point, actually last night or early this morning, Bitcoin did break the all-time high of 19,783 US dollars. And, it's a little bit retraced since then, since that's obviously a selling point. But, the thing that is really interesting about this macroeconomic climate is that we do have sort of unprecedented strength. I think, Kyle, you mentioned PayPal. So, PayPal is introducing 300 million users to the Bitcoin and, Ethereum and others. So, I think it's incredible sort of bench strength. Obviously, you have things like Grayscale, Bitcoin Trust, as well as Ethereum that are buying up. Virtually, if you combine these forces, you're talking about all the minted supply being bought and then more, right? And then obviously there's additional players in here that are sort of sucking all of the supply out of the room. So, if you look at this notion and you look at what's happening with hodling, the floor has been ratcheted up very high, right? So the amount of strength underneath this is much stronger, than in the previous all-time high. And, there were certainly whales that came out during the previous all-time high for major selling, and those are the people that didn't want to be in here, and didn't really believe in the long term. So, I do believe that we've gone through quite a lot as an industry. And, I think that's something that is definitely worth mentioning. And then as a kind of footnote onto that, I think obviously the more Ethereum centric DeFi is absolutely kind of eye popping with respect to the rate and speed of growth. So I think those two warrant quite a lot of mention.
Yeah, so real quick note on your point there around DeFi. So I did a little research pre-show, and we're just over, as you mentioned, we've seen a little bit of a pullback since this morning's highs. We're just over $14 billion USD in total locked value around DeFi applications. So I know it might be a little high, a little low. Just we'll go with 14 for right now as things are fluctuating in real time. But what's fascinating is that 14 billion comes less than 6 months after we crossed 1 billion. I believe it was May 28th, May 29th. We'll fact check that, but it was towards the end of May, we crossed over $1 billion in decentralized finance total locked value. Come full circle, we're just at the end of November, about to begin December. We're now over $14 billion. So to Miko's point, and for the audience, this is an area of growth. It's not just a moment in time. This is a very big area of opportunity and growth. And Miko, thank you for bringing up that point. And we'll come back to more around decentralized finance. Real quick question for you around PayPal. What do you see as the real impact of them entering this space? Because they are pretty late in terms of some of the others, in terms of getting into the digital currency space, whether that's buying and purchasing. But the future plans that they have rolled out brings us to the masses of 300 plus million, as you've mentioned, and may allow for the buying and selling and transacting of general goods, which they have mentioned as well. What's the impact that has on our future of finance?
I think what you were mentioning is you were mentioning kind of non-fintech companies like Apple that are sort of moving in. And obviously we all know that Facebook has announced the upcoming launch of the Libra project, which is expected in January. So, we're really seeing kind of these major tech companies becoming fintech companies. But I would kind of make a slightly cautionary tale there, right? Which is that from a regulatory perspective, it's much more sensible for very large fintech companies like PayPal, obviously Square with Cash App, so these are more of the flag bearers. So if you want to talk about the impact of a PayPal, I think it's actually less on the merchant side. I think these Bitcoin is not terribly good spending money, but I do think that one of the major impacts that we will see is that they're actually not too late, right? Because in some ways, it's all about the technology adoption curve. And in a sense, I think PayPal marks the crossing of the chasm, as you saw in Jeffrey Moore's famous seminal VC classic, Crossing the Chasm, right? So to me, we're no longer in the sort of the canary in the coal mine for the early adopter phase, right? So now we're in the early majority phase, and now it's kind of like normal. And, I have a lot of normies coming to me and saying, well, now Bitcoin doesn't seem like a weird, nerdy scam anymore. It seems like a real thing. And it's because they opened PayPal, and there it is.
There it is. No fees. Everybody's happy. Everyone's excited. But you bring up that great point. I mean, again, 300 million people now all of a sudden have this opportunity to get into something and feel a little bit more entrusted in its future as well. But it's about the technology at the end of the day, Miko, to your point. You're hitting it again right on the nail on the head. There is the technology. And that's what's going to push us forward. So thank you. And we're going to come right back to DeFi here for you in just a moment. But before we do, Adrian, I want to come to you as well on your view of the current state. How are you seeing things around financial services and fintech as things continue to progress here in 2020?
First, discussing about PayPal. PayPal was famous for shutting down people who made purchases for crypto. And I don't think they are late to the game. I think that they entered in the perfect moment because they allowed others to fight with all the jungle of non-regulated market. They have a huge database. They have a lot of users, the millions of users trusting them. So it's very easy for them right now to start offering this service and maybe to launch their own coin. So I believe it's the perfect moment for them. I had my PayPal account, shut it down a few years ago, not from a crypto problem, but for selling digital products, because the two big enemies of PayPal were the crypto guys and the internet marketing guys. So probably now they wanted to change the chapter. And it's very important right now because in every day you see a new fintech company coming, the next big thing in fintech. Every of these companies, and even for established companies, is to define very well which is their market. And one of the examples I want to use is Bo. Bo is a fintech, or was a fintech from UK, which was financed by NatWest, so a classical bank. And they ceased the operation. And you can say that the funding was a problem for such a company. And I see companies. One of the example is Greg Fins. Greg Fins is a small fintech company in UK. What they did, they gathered all the things people like from the actual banks and fintechs, and also piggybacked on all the things people hate on the current fintechs and classical banks, building the application around the customer, which is the way to win, if you ask me.
Well, and that's, I couldn't agree more. The question is, how do those advance, right? From the user interface perspective, we've started to see some very unique things, but there's still so much more to be had in that space. And that kind of brings up my question to both you and Ravi. And Ravi, I'll start with you. You were mentioning that there's a lot of innovation, but there's a need for more innovation. And there's some things that are exciting, but there's more exciting opportunities out there within the space. So really, what's getting you excited, and where is some of that innovation kind of lacking today in the fintech sector?
Hey, so I'm going to continue this theme around cryptos and Bitcoin because I think it's very timely right now. And you know, when we think of Bitcoin, what do we want? Do we want it to be a new version of US dollars or pounds or euros or what it happens to be, or do we want it to be something different? Because right now we don't know exactly what it is. What we do know is that it has a lot of potential, and that potential is from its finite supply, from its unbreakable blockchain. Well, we hope unbreakable blockchain. Anonymity and privacy, or all these good things around this decentralized finance theme. So the innovation needs to come in not just trying to replicate what we've already had in the old banking system, but really leverage the freedom that these new technologies give us to create something truly democratic, and to use more buzzwords to really welcome into a global banking system the people that are unbanked in the world, right? So that's when the emerging market argument comes in, and all those types of things, and really, also just to embrace the fact that things are changing, and the people that are in denial of things like Bitcoin are the ones who are inherently have their futures linked to the existing system. So I'm probably starting to sound like a sort of real revolutionist, socialist type of voice here, but I think the important thing now is that we've seen Bitcoin now reaching the levels where it's at, but everything feels completely different, and that's easy to say. But just go on Google Trends or anywhere, you won't see anywhere near the sort of hype in terms of searching for cryptos and Bitcoins. You see the way it's trading. We're decoupling a little bit from risk assets, which was not the case for most part of this year. You saw during the COVID pandemic that crypto tanked just like equities did, and now you're getting to a point where equities are getting a little bit indifferent at the end of the year, and you're just seeing a lot of non-stop inflow. Like the guys have said, every day you see a new institution, Guggenheim most recently, that are buying up. We have the PayPal thing, but actually I'm not sure if everybody saw it. It was only 6 months ago, maybe a little bit longer, but actually Visa have said that they are bringing crypto into their ecosystem as well. So there's just a lot of positive catalysts, a lot of things here, a lot of enablers. The big companies, the PayPals, the Visas, they're actually going to be the whether they want to or they're not, but catalysts for more innovation. Because if the base providers and enablers are allowing you to be able to move these new currencies across mainstream networks, then that can only be a good thing.
Right. Well, we also have, as you mentioned, Visa, MasterCard as well was in there. We also saw a few headlines a few weeks ago around some of the major auto companies. So Toyota, Hyundai, and a few others are actually building decentralized applications internally for their employees to receive digital currencies as a part of a reward system for their employee reward system, to then be able to spend and export out. And we just got news recently as well, I think last week, that Libra, Facebook Libra's project may be coming to market here in January in some form or another. So I think, to your point, in summary, is really there is a transition. There is no time like right now. It does feel different because it is different. The entire way we look at financial services and the financial infrastructures in place has never been more different, right? We're actually looking at these things as tools that we will use, not just tools conceptually as well. And most of us, in some cases, are using these in pieces, and the new services that are being added in will educate us accordingly. And Miko, anything to add on to Ravi's point there, as he's mentioning this transition of how we look at and think about digital currencies in our lives?
Yeah, I mean, I think that your opener, Kyle, actually, I think touches this transformation well, right? Which is, I think we do see kind of the war on cash and contactless being kind of a major theme. And, if you go to China, like basically nobody is using cash anymore. It's all kind of digital, right? So, I think that's kind of an inevitability. Obviously, that touches retail. But, I actually think that these kinds of things also have a knock-on sort of psychological effect, right? Which is that, if nobody, everyone is retail at some point, right? Like Jamie Dimon, the CEO of a bank, of JP Morgan, like when he goes to the store, like if he's pure digital, like it's it affects everyone, right? So I think everyone's retail, even institutional people are retail. So
it's very true, and that kind of leads me into decentralized finance and a little bit of what we were talking about being your own bank, because digital currency is one of the mantras that we see commonly, is the idea that the idea of digital currencies is it kind of brings you to this point of being your own bank, holding your own currency, and what that means for the future we'll see. But Miko, I want to come to you, and the idea of everyone being their own bank. Are people really ready for this? Is this really a responsibility people are ready to take on fully, or just conceptually it's a good starting point?
Yeah, so being your own bank really boils down to cryptographic custody, right? Which means kind of maintaining security over cryptographic key. And I have to tell everyone that like the industry standard for that is to really have a piece of paper with a bunch of words written on it, hidden somewhere, buried in your backyard under an X, So I would say that like that's the gold standard at the moment, to be perfectly blunt, and so I feel like what's happening is that we're at the stage where it's like the stage of electricity where if you wanted to turn on a lamp, you had to go inside your wall and find like a red wire and a green wire and then connect them and try not to get electrocuted, right? And people are getting electrocuted, right? So I think that's the stage we're at, right? Which is we're taking the raw properties of the infrastructure and we're basically exposing them to consumers directly, which I think is a mistake, right? Like if you look at what we're doing, for example, at Evercoin, we have a mobile cold storage that's linked to YubiKey, right? And what we're enabling is also a non-custodial backup and recovery, which is kind of a shocking concept, right? But all of it's doable in product, and it's doable with cryptography and mathematics. So I guess what I'm saying is that we all as an industry need to do better. But I think, after we deliver, people will be able to be their own banks and maintain custody. They just won't have to have this kind of scheme, right? Because I think what Evercoin has done with non-custodial backup is created a safe, effectively like multi-sig-like instrument that allows you to back up something without handing it over, right? So backing it up, it means that we've moved from dependence to and not pure independence, but interdependence, right? We've moved to a stage where you can be helped when you're in trouble, but you don't have to hand over the keys to the kingdom to some foreign party you don't know.
Right. No, it's a very good point. Ravi, anything to add?
Yeah, I really love this this point about custody, because it does I walk around with my Trezor and I'm like holding it like it's like some diamond or something, right? He's like, because even if you do have the seed, you smash that thing and you can lose them, and it's just it generates paranoia. And I'm someone, I feel like I understand how this stuff works, so I couldn't imagine if you don't get it, like how you just wouldn't want to go there. So I think that's really interesting. But and it has its pros and cons, but ultimately it also helps from the compliance perspective, because if you have these regulated custodians that are holding the custody on behalf of retail customers, that's a nice little piece to the puzzle that can fit in and help move things along and legitimize the whole system as well. So yeah, I think then this is just another great example of how early in this entire process we are, right? About defining what we want this to be. And I'll go back to my point of, we don't want to just replicate what we have before. We want to improve on it, right? So you shouldn't listen to people that are sitting there criticizing, oh, Bitcoin's not a currency because it doesn't have a yield, or you can't put it in a bank account or something like that. We want to do things better going forward. We don't want to just replicate what we have before. which literally just strengthens the existing institutions that just hold far too much power over the capital markets and the global banking system as it is.
Yeah, and that actually takes me to the next question, which is where do we go from here? So looking ahead to 2021 and even into 2022, where are the areas of opportunity, whether it be in traditional finance, infrastructure, the picks and shovels, decentralized finance, so DeFi, or digital currencies? I mean, where do things go from here? There's a lot of headlines of things that are supposed to be coming to market in 2021 and 2022, whether that be on the decentralized side in terms of central bank digital currencies, more distributed services. We're looking at new infrastructure upgrades. There's so much, and I'm not even mentioning Ethereum 2.0, which is due to come out here in a few hours, depending on where you may be in the world in the first phase of that. But there's so much that's supposed to be happening. Where do you three see the areas of opportunity as an investor or as an entrepreneur to be focused on in terms of redefining the way we think about fintech and financial services? And Adrian, we'll start with you.
A very interesting paradox is happening now. Crypto was meant to be a decentralized thing, but some very big players like PayPal and Square are highly centralized platforms with KYC and everything. There is a problem and an opportunity here, because in the decentralized world, and especially with crypto, if somebody will steal your funds, I don't know, if you are not a high profile person, so your funds to be traced, in 99% of the cases, the funds are lost. But if somebody is stealing your crypto from a PayPal account, I believe that through PayPal's means, you will be able to recover the amounts. So I see a big opportunity in this space. And as I mentioned in other episodes, I see as big opportunities the companies which will build products around the needs of the customers and also to anticipate their needs.
Thank you. And Ravi, I want to come to you next on this. Looking ahead towards the areas of opportunity, where are you seeing the biggest growth potential? Again, looking ahead to the next 12 to 18 months as we head into 2021 and even early 2022, with all the news and the headlines, with traditional finance, decentralized finance, where do you see those opportunities for those to again start investing and building?
So in my opinion, you don't have to look much further than the payment space to start with. I mean, somebody mentioned China earlier. I read somewhere that on Chinese New Year, X trillion dollars gets passed through systems like WeChat, and I think they even have it on some other systems provided by other Alibaba and various other large Chinese tech companies. So there's a huge amount of potential to start absorbing the crypto space into that in some shape or form. So when I'm out looking at opportunities, I just want to see somebody that's trying to repeat myself from before, trying to do something different, not necessarily just trying to replicate something that works in the US dollar or pound monetary system. I want to see something a little bit different. And I'm not just talking about the sort of, I mean, obviously we had the ICO rush a few years ago, which was just everybody trying to jump on board the hype of Bitcoin, and basically it was this huge wealth transfer of weak hands of people just trying to jump on board, people raising capital for projects that just made no sense at all. But I think a lot of that now, thankfully, is water under the bridge. And I'm hoping finally now we can see some really interesting projects come through that try to really do things in a legitimate way and ultimately help us along this path of finding true utility from Bitcoin and the other big platforms.
And thank you, Ravi. Miko, to you, same question. Where are you seeing these areas of opportunity emerge?
Yeah, I'd love to kind of riff off of what Ravi supplied, which is that, to me, I have this metaphor where it's basically like, you're standing on a high place on a metal beam, right? That's known to collapse, right? And what is this beam? It's basically our existing financial system, right? So what happens if some clever Satoshi guy puts a beam of unknown material next to you? Unknown material, right? So what you're going to expect is you're going to expect that the person on the high beam is going to actually put their weight on the new beam. But are they going to put 100% of their weight on the beam? No, they're not going to. They're going to put a small amount of weight on the beam, right? And the thing that's fascinating is they're testing the properties of the beam, right? So it turns out, like, for example, in ICO, it turns out that the beam maybe was more rubbery, right? So maybe he slipped and maybe some money fell out of his pocket, so he lost some money. Right. So now he pulled his foot back. Right. So the thing that's really interesting is he kind of tests the properties of the new beam, as we're seeing that the beam is proving more and more and more to be sturdy and reliable. You just have to interact with it properly. Right. So to me, the opportunity is to continue to go through this process, and learn, right? So if you look at DeFi, that's happening even in the micro, right? Which is we've recently seen kind of Oracle-based attacks, and we've seen rebasing attacks, and we've seen all kinds of like security problems. We've seen attacks on Harvest Finance. Obviously, the pickle jars were robbed. We saw rebasing problems with like Yam. We saw the Yam apocalypse. We saw like OUSD got snabbed. Acropolis. So there's a lot of like security issues, right? But the thing that's so funny is that's just the process. It's just a learning process, right? And so to me, the opportunity, my fund invested in Idle Finance, and like, within days of their governance token launch, the TVL went to 16 million, right? But you got to understand, these are raw startups, right? So like 16 million, the speed of traction is so much higher than in traditional fintech. So, I think we're just, we're very hopeful that DeFi is going to produce some really big winners.
I mean, speaking of speed, it is incredibly fast. Do you see that getting faster, or do you see it actually slowing down? And the reason I throw that out there is the pace is insane. I'll just put it out there bluntly. It's crazy how fast these things can not only pop up, but in terms of total lock value or wealth creation can happen. And again, this is in terms of building the company or the product or service. But do you think we may see a slowdown where things go a little bit traditionally more slower to build the infrastructure to really harden the service that's there, and then we see a scale? Right now, it seems like day one scale.
I think it's paradoxical. And what I mean by that is I think that the fast will go fast and the slow, I think it will go faster, but the slowness will really be people getting wrecked, right? Which is there are going to be people who don't have what it takes to deploy capital, and they're going to lose quite a lot. And so that in a way you could look at that as breaks, but but for example, take a look at what Andre Kranja is doing with, Wi-Fi. Like at the moment he's doing like, he's kind of on an acquisition rampage, right? So it's kind of like, Pickle, he picked up Cream, and so the speed at which Wi-Fi is basically consolidating is lightning fast, right? So, I think that it really is going to be a very fast industry, because there's nothing stopping it from being fast. And the other thing that's shocking is if you look at the story of something like Sushi, the moment that the kind of mining incentives declined on the Uniswap side, Sushi just spiked, right? Because the TVL swung over. This is the second swing over, not the initial vampiric swing over, but the swing over post kind of Uniswap mining reward. So, amazing, right? Amazing to see, TVL can switch in a day or in a minute or in a microsecond. So, that's how fast this thing is.
I love it. And it's going to just stay tuned, everybody. There's so much more to be had here. And gentlemen, I want to come to each of you for closing thoughts and where you can be found online for those looking to continue the conversation, because each of you focus on a different area of finance, but there is a common theme amongst all of you. And I think there's a lot of our audience that would like to connect and continue the conversation. But before we get to that, closing thoughts from each of you. So Adrian, closing thoughts, anything else to add on the future of financial services and fintech as we look ahead towards the year 2021 and beyond, but also where can everyone find you online to continue the conversation? Oh, Adrian?
Sorry, there is a little bit of delay, so I didn't hear.
Okay.
My communication hub is on LinkedIn, so you can find me there, Adrian Niculescu. I answer to all messages, not all the time immediately, and I'm happy to help with anything I can, and can't wait to join the new family sessions on VCTV.
Wonderful. Thank you, Adrian. We're happy to have you. Ravi, any other closing thoughts to add in terms to leave the audience with is where financial services and fintech will go here in the next year? And then, of course, where can everyone find you to continue the conversation?
Well, I think the possibilities are endless. I really like that we're seeing this latest move in the price of Bitcoin, which ultimately I don't think is that important, because I think there are a lot more important aspects to the cryptocurrency ecosystem than just the price. Because ultimately, if you think about it, if we're moving into a digital currency ecosystem away from traditional currencies, then we shouldn't care about the price so much. But I do think it's time to see this level of innovation really increase in terms of legitimate players providing legitimate services that really help underbanked populations. And to your point about the pace of technology and innovation, I do think we'll see a little bit of a slowdown. We've seen in history that technology tends to go through these S curves. I certainly think we've been through that sort of increased pace of innovation and tech over the last few years, epitomized by the big companies. But I do think we'll see that slow down, and that's actually a good thing. We can digest what we've achieved in the digital currency space and allow some breathing room for the real innovators to sit down and think, right, we have some critical mass. How do we not just monetize that, but actually build upon the foundation that we've created, so that we start to reduce the volatility in this ecosystem, and then we can start seeing some real gains in terms of where we go from there. And I can be found on LinkedIn. Thank you.
Thank you. Miko, close us out. Any additional closing thoughts to add, furthering Ravi and Adrian, and then of course, where can everyone find you online to continue the conversation?
Yeah, absolutely. So if you want to learn more about DeFi, just grab me on miko.com/bits, BITS. My Twitter handle for crypto is MikoBits, MIKOBITS. And I think as a closing note, it's an extremely exciting time for open source financial infrastructure, digital payments, digital currencies, and digital assets. So, I would definitely encourage everyone to sort of at least consider, hedging into these instruments. So, this is not investment advice, but get some exposure, whether it be through GBTC or through a custodian or through Coinbase or PayPal, or directly becoming your own bank. So, but just don't risk more than you can afford to lose, of course.
There you go. Thank you very much, Miko, Adrian, and Ravi. Appreciate all the thoughts and insights today. And to your audience, thank you. Yeah, absolutely. Thank you guys. You are the experts in sharing with us today. So a pleasure. And to your audience, thank you so much for tuning in. If you like what you heard, click subscribe. Give us a thumbs up. Thank you, Adrian. There we go. Do reach out if you'd like to be on a show like today and join our guests and investors and share your thoughts and insights on different technologies, industries, and regions around the world. Thank you, Miko. We'd love to have you on here, and definitely reach out. We'd love to find the right spot for you. And entrepreneurs, again, there's an opportunity for you here as we come towards the last month of 2020. What better way to end the year and kick off another than jumping on the virtual stage here at VCTV? Thank you, Ravi. To share your company, product, or service with us as investors and founders focused on your area to get real-time feedback, also build foundational relationships with us, and exposure to our entire live audience. Reach out to the team and or myself. We'd love to find the right spot for you. Last but not least, a big thank you to the LATOKEN team and Maria for making VCTV possible every single day and bringing us all together from different corners of the world. That being said, I'm your host, Kyle Ellicott. You can find me everywhere online, 24/7, 365 at Kyle Ellicott, and all of our guests as well. Do reach out. Make sure to add context when you do. With that,